All right, so let's get started. Now, in this weak economy, I know that a lot of you live in perpetual fear of being laid off at work. Now, it doesn't matter how hard you work, there's often nothing you can do when that cost-cutting demon comes knocking. But if you plan ahead, you can make sure that your investments and your finances are ready, and you can buy yourself at least 3 or 4 months' time to find a new job. All it takes is 4 very simple steps. Here's a look at how you can make yourself worry-free. In a world where the words slow down and cost-cutting are becoming part of our daily lives, layoffs are becoming a reality.
Yes.
A job loss is a scary situation for anyone, whether you have obligations or not. And for those of us who do have loans to pay back and family members to care for, planning ahead can ensure financial stability. There are 3 simple steps you can take to be better prepared. Start by creating a contingency fund of 3 to 6 months of your expenses. Buy an individual health policy and a life cover. And finally, track your Provident Fund account. Let's go through this list one by one. You need to start by making a list of all your daily expenses and formal commitments so you know how much money you need in your contingency fund. Your list should include rent, EMIs, school fees, bills, and entertainment costs.
It's typical to have about 6 months of all your expenses, your living expenses, your EMIs, your insurance premiums, all of them put together is what you would multiply that by 6 and that's what you would have as a contingency reserve.
It also makes sense to reduce your debt as far as possible. Pay off all your loans, starting with your credit card and personal loans to your auto and your housing loan. Don't be afraid to liquidate some of your assets to pay off your loans.
If you have certain assets, like for example, if you have fixed deposit which is yielding you 8 or 9%, and you have outstanding home loan which is costing you 10-11% or car loan, then try and liquidate portion of the fixed deposit and pay off those loans. What will happen is, one is you'll have lesser burden of loan tension, as well as your EMIs would come down, so your contingency fund requirements will come down.
Once you have the money for your contingency fund, don't leave it sitting in your bank account. You should move that money into an investment that will yield strong returns, keep your capital safe, and allow you to pull the money out when you need it. Which means you have to choose between a fixed deposit and a debt fund.
Fixed deposit will give you a assured return, but the interest that comes to you is taxable. Mutual funds would have a return which are a little variable, but there is a dividend distribution tax, but the money in your hand is tax free. So based on what tax bracket you are in, the surety of income that you require, you choose a debt fund.
The next on your list is your insurance covers. Now, most of us rely on health insurance provided by our employers. But is that cover enough? And what happens if you lose your job? Having an individual health policy is an absolute must. If you live in one of India's big cities, you need a cover of at least 5 lakh rupees. And if you live outside our metros, then a cover of 3 lakh rupees should do.
Today, health insurance provided by employers is under increasing threat. The cost is going up. And because cost is going up, employers are cringing on the benefits that are available, one, or they are limiting the amount. So therefore the cover may be there, it may not be enough. This is even while you are there with the employer. When you change jobs, it's not necessary that the new employer has a health cover or that it is sufficient.
Understand all the perks your employer gives you. If a life insurance policy is one of them, make sure you buy an individual cover as well. If you're the breadwinner of your family, your life cover should pay off all your outstanding loans if something were to happen to you. The last thing to keep in mind is your Provident Fund account. Experts recommend you keep track of the balance in your Provident Fund account every year. You can easily find all of those details online.
If you're not likely to get another job or already 6 months have passed and you haven't, although you had thought you would but you haven't, and now it looks unlikely, then you need to plan for the CPF money. Possibly you should withdraw it.
Now, armed with this list, plan ahead for any unexpected job loss. It does make sense to sit down with your family and your financial planner and chalk out your risks and plan your contingencies together. Alright, I hope you got that down, and you can write back to us if you need more help with that plan. Let me bring in Dhirendra Kumar.